Closing bell ringing on Wall Street. Very strange sort of day. The Dow eking out a small gain, having been down, but that doesn't really tell the whole story because the tech stocks have been very sharply lower throughout the session. Yes, sir. 1, 2, 3. Oh, excellent. Trading with a robust gavel is now concluded. It is Thursday. It's September the 6th. Fear and regulation. Social media stocks keep on sliding, and the bosses continue to be grilled on Capitol Hill. A ground-up view of the trade war. Two business leaders explain the real costs of global tariffs. And flights to India on a shoestring. Wow, the CEO is with us during this hour. I'm Richard Quest, live from the world's financial capital, New York City, where even on a down day or an up day or a middling sort of day, I mean business. Good evening. Some of the biggest names in tech have been caught up in a selling spiral today. And while the chorus of questions from Congress may have stopped, the selling has most definitely not. Social media stocks have certainly taken a strong hit. Look at the numbers. You'll see Twitter, Facebook, Google and Snap all off very sharply. By the way, for those of you who are interested in my Snap holding, you'll be pleased to know that my Snap holding is now down some 64%. Let's put it together and show you what's been happening in the trading post. Shows what happens when you do a bit of travelling, come back with a bit of a chesty throat. Now, the tech sector has been hit the hardest, with all the major indices falling. You've got the Dow that was up Dow was up, the S&P was down, the Nasdaq is down. We call that a red day today, please. Red, even though the Dow is up, it's outweighed by the other two. The Nasdaq is now off some 2% over the past week. There are still fears of regulation for technology companies. On last night's program, we showed you how Facebook and Twitter executives were forced to defend their platforms and their business models in front of members of Congress.
When bad actors try to use our site, we will block them. When content violates our policies, we will take it down. And when our opponents use new techniques, we will share them so we can strengthen our collective efforts.
We don't believe that we can create a digital public square for people if they don't feel safe to participate in the first place. And that is our number one and singular objective as a company, is to increase the health of this public space.
But those still worries about the Nasdaq continue to pull it down. And I think you really do see this closely. The Dow ekes out a smallish gain, just barely. Boeing pulled it up. Boeing was the best performer in the Dow. The S&P is down, but the Nasdaq loses the best part of 1%. Teddy Weisberg from Seaport Securities joins me from the New York Stock Exchange. Yesterday and today, the tech stocks were being hurt. But what's the reason? What's behind it? What are you worried about in the market?
Well, you know, nothing lasts forever, and it's certainly not over for the tech stocks. But clearly, you can go back to when Facebook reported their earnings 2 or 3 weeks ago, and they were somewhat disappointing, and that stock was down 22% in one day. Now, since then, you've had a bunch of tech stocks make new all-time highs. But the fact is, the sector is just simply out of favor, probably for a couple of reasons, not the least of which is when you got the government breathing down your back, no matter what the issue, it does create a bit of a cloud over a sector. But overall, we've just seen a shift, if you will, sector rotation out of the techs, you know, into the broader market. And from the standpoint of the overall stock market, right, Richard, that's actually not so. That's not a bad sign. That's actually healthy.
So whilst the rotation continues, or at least holds its own, right, but nobody would ever suggest for a moment that one has to stay away from tech. Because at the end of the day, it is the Amazons, it's the Googles, it's the Apples, the Microsofts that are driving the economy and driving the success of so many other companies.
Well, clearly they have been the bellwether sector for 4 or 5 years, you know, without skipping a beat. but things just can reverse and go the other way, and there clearly are issues, and there are issues. It doesn't mean that the growth, both bottom and top line, is still not there in the tech area, but for the moment, they quite frankly are just out of favor, and it happens, and I don't think I would abandon the sector for a heartbeat, but you just have to be a little careful for the moment.
Okay, which always begs the question, Ted, is this the classic buy on the dips? When you've got Amazon with its 52-week high at 2024, now maybe languishing at, 1,800 or whatever. You've got the same with Netflix, down 4 or 5% on a day. Is this the moment when, if you wanted to or were minded to, you would start thinking about picking something up?
Well, I think that's a fair question, and I think the answer is probably yes. But because in the past, if you had bought the weakness in the tech sector, and we've seen periods like this before with the tech stocks, it's turned out to be the right thing to do. And the overall direction for the market continues to be positive. And I think that until that changes, you want to buy the weakness. It's just a timing issue, not so much when you buy them. It's really just timing.
Good to see you, sir. Thank you. Ted Reisberg at the Stock Exchange. See you on the floor. Now, staying with the markets, shares of CBS closed up more than 3%. Les Moonves is mulling an exit from CBS a month after sexual misconduct allegations against him became public. Now, Moonves is credited with building CBS into a massive empire. The hit shows NCIS, CSI, 60 Minutes, Big Brother. Moonves is also known for his bitter fight. It's extremely complicated with his corporate owner, Shari Redstone's National Amusements Inc. And we're certainly not going to get into that in too much detail. But Moonves and CBS have sued to block a merger with Viacom. CBS and National Amusements are now reportedly trying to solve the dispute. CNN's media correspondent, Brian Seltzer, is with me. Brian, at the end of the day, forget the disagreements. He would be leaving because of why?
Because of the harassment and assault allegations that were leveled against him in the New Yorker magazine. That was about 6 weeks ago. That was Ronan Farrow's reporting with some women on the record. And you'll remember at the time, Moonves admitted to making some mistakes in his past, but also vowed to fight. He did not step down. Was not suspended. Now all the lawyers are involved, and oftentimes when the lawyers get involved, you get to this point we're at now where there's talk of a very lucrative exit package.
I saw the figure of $200 million being quoted.
Yes, he's owed about $200 million according to his contract that goes through 2021.
Well, he's certainly not going to leave before that. Why would you?
Willingly, right, why would you? So if they fire him one day for no good reason, that's how much he's owed. If they fire him because he was allegedly harassing women in his past, then it's a lot more complicated, right? Then you're firing him for cause, and it's going to be a big negotiation, and that's where we are now.
We've always said that there would be a moment when a line would be drawn and people would say, look, that was bad behavior, but it doesn't merit losing the person from the post. If what you're saying is true, then Moonves is not that moment.
I do think we're in a new phase of Me Too, though, where it's more complicated. This is a CEO, there's an incredible amount of money on the line, and so he did not leave right away. It's been a battle, and the battle continues. I mean, I know I spoke with one of Moonves' friends who confirmed, yeah, he is talking about leaving, but he may well be fighting this every step of the way, and we don't yet know how this exactly will end.
I have to ask you, delighted to have you here, so I'm going to throw anything I can.
Oh, boy.
Oh, no, here you go. The New York Times article, the anonymous op-ed.
Yes.
How significant is it for because you were at the Times.
Yes, yeah.
To do an anonymous op-ed?
It's only happened a few times in the paper's history, and normally it's because the person's life is in danger, the person's life is at risk. In this case, it's because the person's job is at risk. This person apparently wants to stay in the government, trying to be one of the good guys, protecting the country from Trump, and so the Times did grant an anonymity for that reason. It's not an uncontroversial decision, obviously, but I do think the Times is standing by it today. Meanwhile, its phone lines are burning up. The White House press secretary urged the public to call and complain to the New York Times.
And finally, the president calls it constantly the failing New York Times.
Right.
Is it failing?
It couldn't be anything. Couldn't be anything opposite from the truth. The paper is succeeding partly thanks to the Trump age. People are tuning in. People are reading. People are subscribing. Let's remember what Trump called the New York Times back in 2016, an American crown jewel. He's not saying that today, though.
Good to see you, sir.
You too.
Thank you. Brian Salter with us at the moment. South Africa's central bank governor says investors should not put his country in the same category as Turkey or Argentina. He told the Financial Times those comparisons were unfair as the country gets clobbered by the emerging markets sell-off. Now, if you look at the emerging markets sell-off, investors are worried. Investors indeed are worried, there we go, about the herd mentality. And that's really what we're talking about here, the herd mentality of the market, where everybody sees the direction and follows towards the door. Now, it started indeed with Turkey. It spread to South Africa, China and Indonesia, with stocks falling. Argentina and Brazil currencies are falling. In all the different cases, we can pass a different reason, we can suggest an underlying difference between them, but the end result remains the same. The herd mentality pushes them to the door. Andres Valesco is the Chile's former finance minister. He's in London tonight. Do you believe the herd mentality now is well and truly taken hold?
I think, Richard, the answer is yes. You see countries with very weak fundamentals, countries that actually have pretty strong economies, but when the word on Wall Street and in London is sell, all emerging markets begin to look alike. And I think we are in the middle of something that may be looking like a panic. The last 2 days haven't been quite as bad as the days before, but some pretty reasonable economies are getting punished for the sins of others.
What's the reason behind it? I know we could arguably say that it's because, for example, US interest rates are going up higher, they're rising higher, and US growth is higher, therefore better rates of returns in the United States versus currency risk. But that seems a bit simplistic for why people would pull out of emerging markets.
I think it's a combination of psychological factors and real factors. Among the real factors, first of all, is what you just mentioned. If you look at history, every time there's been a crisis in emerging markets, whether it's the Latin American debt crisis of the 1980s or the tequila crisis of 1994 or the Russian crisis of 1998, every time you had a spike in U.S. interest rates. Of course, right now we're beginning from very low interest rates in the U.S., but maybe what matters is the direction of change, and that direction is up.
And do you
In addition, you've got at least two other things. One is a trade war and Trump's unpredictability. And the other one for a number of countries, particularly in Latin America, is lower commodity prices. For a country like Brazil or Argentina, the price of wheat, the price of orange juice, the price of soy. For Chile, the price of copper. Those things are looking down, and that matters a great deal as well.
Well, let's stay with that. And so you've taken the commodity prices are down for a variety of reasons. Some of them currency related, some of them trade related with tariffs as well. But the economies of Argentina and Brazil are in trouble to a larger or lesser extent for different reasons, though, aren't they?
I think so. Today, I think they look pretty different. Brazil is sitting on about $350 billion of reserves, so nobody is expecting Brazil to tank. What Brazil is facing is a very, very uncertain election with a man who's leading in the polls locked up in jail for 12 years on corruption counts, and a great deal of uncertainty as to who will be able to run in the end and who may win that election in October. Argentina is a different story. Argentina, of course, is a country with a very long history of financial crises. And one should begin by saying that Argentina today has a pretty able government and is much better run than it has been in the past. However, you know, it is short of reserves. It did have to go to the IMF for an emergency loan. And once markets get nervous, well, they begin selling, and that's exactly what we're seeing.
Right, and as you go around, whether it be Turkey, Argentina, Brazil, each may have its individual problems that creates this herd movement predicated by an external event, say, for example, rising US interest rates. But what breaks the herd mentality? So that individually you say, well, that country is worth going back into?
Well, if one knew exactly what the one trigger is for going back in, you know, we wouldn't be so nervous. The short answer is we don't know. Once you begin expecting that everybody else will sell, the reasonable answer is, well, you sell as well. And that's exactly what's been happening in Turkey, in South Africa, and in Argentina. There gets to a point, of course, when you think maybe in Argentina today, the currency is very much undervalued.
Right.
It is beneath its fair value, so it may be time to go back in. And over the last couple of days, a bit of that has been happening. Last week, the Argentine peso was trading at over 40 pesos to the dollar. Today, it came down to 38. So maybe we're getting to the point where people say, if this has gone on for too long, I will go back in. But truth of the matter is, it is very hard to know exactly when that time will be.
And I suspect if we could know when that time is and could time it exactly, you and I wouldn't be doing what we're doing, we'd be going off and doing it.
Well, we are having a lovely conversation, but yes, we would be sitting in front of a screen trading.
Exactly.
Of course, it's very hard to know. I should say also that in the case of Argentina, I think the punishment exceeds the crime.
Right.
It is true that Argentina made some mistakes in the recent past. It is true that Argentina has a fiscal deficit of about 5% of GDP. But there are plenty of other countries in the world with similar fiscal deficits, and you don't see the kind of market attack that Argentina has been going through.
Good to see you, sir. Come back again, please. We'll talk more about it. Thank you much.
Thank you. My pleasure.
As we continue.